So let's look at a $500,000 mortgage, and let's look at bank rates today in the low twos. Call it 2.25% just to keep it simple. And let's call the self-employed lenders at 3.5%. The difference is 1.25%, and on $500,000, that equates to $330 a month. That's about $4,000 a year in payments. In simple math, interest-wise over a year, it's about $6,200. Now that's a lot of money, but to qualify for $500,000, you would need an income, taxable income, of roughly $100,000. So if you went to your accountant, asked your accountant, hey, I have to show $100,000 in taxes for the current tax year to qualify with Mr. or Mrs. Bank, they basically will say that's fine, but you have to give Revenue Canada roughly half of that. And $100,000, you'd be at a 50% tax bracket. So you'd have to give Revenue Canada $50,000 to save $330 a month, or $4,000 a year. So when you break down the math for business and self people, please don't be giving Revenue Canada extra money you don't need to. If you can handle an additional $330 cash flow, and by the way, you'd be able to if you had that extra $50,000 in your corporate bank account, you're better off to go with a business for self lender at a slightly higher interest rate. And don't forget, 3.5% a few years back was what the banks were lending at. So it's still a low rate and allows you to keep your money in your bank rather than give it to the government. Thank you.